I'm Tim Moody, President and CEO of Pan Global Resources. We're a copper-focused exploration company, one of the few in Europe, and we have an advanced copper discovery, 180 drill holes to date, lots of upside and some exciting exploration targets nearby. So, a really exciting story. Check us out.
Welcome to London. We both live here. It's a short journey to work today, wasn't it? That's great news. We're here at the conference. Lots of meetings?
Yes, I'm here with my colleague Jason Mercier, and we've, I think, 24 meetings over the 2 days, plus this.
Wow.
Dinners and and conversations in between. So it's been really intensive.
But you've been doing that for the last 2 years as well. Like, it feels like it's kind of paying off in terms of when you get to market. The money's there when you want it to be. We won't talk about what the equity prices are doing across the board, but you raised some money recently. Easy?
Well, we went out targeting 3 million. It's an uncertain world out there, and a lot of companies are finding it difficult to raise money in this market. So we were very fortunate. We ended up closing at a bit over 7.2 million.
Okay.
Within the first 24 hours, we'd already exceeded our initial target, which was really with two main investors. So, and then we very quickly realised that we needed to upsize, and so we upsized to 7, and we were still getting orders right up to the last days.
So talk to me about the mentality of going out for 3, realising there's more demand, and then I think 7.2 is the final number. Why? Because some people may accuse you of saying, well, that's heavily dilutive to us. What are the negatives, what are the positives when you're weighing these things up?
Yeah, so obviously dilution, it's something that comes with every raise you do generally. So look, we don't like it, but it's something we have to deal with. We'll deal with the dilution at some point. But in the meantime, what was far more important is that we have a healthy treasury so that we can get on and do the business that we're good at. So I think that overweighed everything else at this stage. So to come away with 7 million instead of 3, for us, it was a great success, and it really now gives us a much better runway to get on and do the work that we really want to do.
Okay, so a difficult choice, but at least you had the choice. I guess is the thing. Because I think the equities more broadly just not seeing the love still. I think there's expectation that money will come cascading down from mergers and acquisitions out there, but I'm not sure that's the reality anytime soon. So back to business. What are you going to do with the money?
Yeah. Well, I think this is why I think we may have had so much success with this financing, was that people could see not only if we've got something real, it's growing. So part of the money will be going towards our La Romana deposit and continuing to expand and delineate the extent of that mineralization before we publish a resource, and we expect to put out a PEA either together with it or very soon after. So that's part of the objective for this year with the drill money. So we've got maybe 5,000 metres.
This year, as in the next 12 months? Or
in the next 12 months, I should say.
Okay, fine. Sorry. So that's the kind of immediate aim there, but also you've got other projects?
That's right. So we also want to remain very focused actually on where we put our dollars elsewhere. Now, it's really important, obviously, to advance and help sort of underpin the value of the company with a resource. Eventually, we recognise that. But equally so, we realise that if we can make another discovery, that's where you can really get a boost to your share price. And more importantly, quickly add or double or whatever to the potential resource you've already got. So we really see that exploration on new targets, and finding something else is where you can really have a big impact. So we've got the Bravo target, 1 kilometre from our main discovery. It's really high priority. That's our other.
But let's talk about that, because a lot of geologists come in here and say, well, we're aiming to make a discovery. They never do. It's hard, right? You have already, and you've done a lot of additional work, which leads you to believe that we think we can make another discovery. Is that the mentality?
Absolutely. Well, we've sort of confirmed that theory, at least to some extent. As you know, earlier this year we started drilling another target called Cañada Honda. We've been hitting what we would consider potentially all grade and thickness, copper and gold mineralisation. That's about 4 kilometres to the north of La Romana.
Yeah.
But it's a much deeper target. It's a very big, large-scale opportunity.
Yeah.
It's twice the strike length of La Romana, so 3 kilometres long.
Yeah.
But we're talking 500 to 700 metres deep to get to the best part of that target. So.
Right.
Just at this stage, we would prefer to test Bravo, given its it's much closer to La Romana.
Yeah.
It could be near surface. The scale of the geophysics, etc., and geochemistry, all the various indicators are suggesting if it is mineralisation, it could be something as big or bigger than La Romana. So
yeah, but you're gonna have to. Because those two are never going to join up, right? So it's
well, they may. That's the thing. La Romana and Bravo may actually join up. That's that's something we'll have to test. So we've been extending the soil geochemistry, but we've got post mineral cover over the top.
How do you come at that, right? Because it may join up, and they are far apart at the moment, but maybe part of the same complex eventually. Yeah. But if that doesn't kind of work out, or if you don't get the data that you want, you're going to have to hope that this stacks up on its own. So you're going to have to drill to allow that to happen. One, to get a resource out, and two, to get a PEA out. So what's the weighting in terms of the drill, how much you spend on the drills?
Well, on a new target, you're not going to go in there with a drilling 50 or so drill holes. You do some very carefully positioned drill holes in this first pass.
Yeah.
You try to get some more geological information. Hopefully you hit some mineralisation. Give you some indication there's something worth following up. And then using that information, you then go back and make a decision. Is this still something we want to go after or not?
Yeah.
So in the first instance at the Bravo target, we could see 3 to 5 drill holes. We've earmarked about 1,500 metres for drilling that target.
And it's a bit deeper, so...
No, Bravo, we don't know. It's never been drilled.
Okay.
It's flat terrain.
But you're thinking what?
It could be shallow because we're getting a soil geochemistry response, which you would have to think is not coming from something 100 metres below the surface. It must be coming from something reasonably close. So...
so something can give some quick wins there, potentially.
Potentially, that's right. So we've got some ground geophysics underway at the moment, an IP survey.
Yeah.
That's going to help us really better position those initial few drill holes. And we hope with the geophysics is completed in the next 2 or 3 weeks that we might have a draw rig there before the end of the year, if not early next year.
Okay, let's come back. Romana.
Yep.
If we're talking resource... We're talking PEA. You've got a lot of data. You've done a lot of drilling already. What more do you need to add to that? Because obviously, any investor is going to look at what's the scale potential of this thing. The PEA is going to give some sense of the economics. Again, focus on that. What do we need to know?
So whilst we think we may have something that's a standalone deposit today, if we really want to compete with some of the other bigger producers in the area, something that's really going to attract even perhaps more M&A options for us, we should try and make this as big as possible. So all of the big mines are not just single ore bodies. Yeah. They're made up of clusters of deposits. So whether it's Neves Corvo, with 7 different ore bodies make up that deposit. Let's say the Rio Tinto mine, maybe 5 different massive sulfide deposits making up that ore body. So that's the norm. Even Aguas Tenidas or Sotio Magoyas, they're 5 different ore bodies. So La Romana's one. Yep. We think with the targets, the suite of targets that we have in pretty near proximity to La Romana and to Group of Mexico, we've got an excellent opportunity of making additional discoveries, and we can't last count. We've got about 15 different targets, many of which are drill ready right today. So, but we're not going out and drilling all those straight away. We're really being very selective on where we're going to put that drill money, and Bravo stands out at this stage as the next highest priority after the delineation drilling at La Romana.
And so to deliver that scale in terms of like step pattern versus infill, etc. the economics. I mean, it's critical that it looks like an economic mine, or has the potential to be economic. What happens at that point? You're a team of geologists,
and mining engineers, actually.
And mining, I met a couple of them. So how do you kind of set this up for maybe someone to kind of come in? Because getting an industry partner is probably going to be
one of the options.
Goal, right?
Well, we have, fortunately, again, our location gives us optionality that perhaps many other companies perhaps in a similar situation may not have. We're near other bigger producers. If Group of Mexico ahead with the mine, if they get their final permit, that's right next door to us. Fourth largest copper producer in the world. Just down the road is First Quantum with Las Cruces. So these present other opportunities where a low capital intensity option would be if you're trucking or conveyor belting the ore to one of those other mines. You don't have to build a plant. You don't have to build tailings. So that could be a very attractive economic proposition as things are today. But if we're successful with our exploration, not only expanding and delineating an economic resource at La Romana, but we can add to that and add more deposits, just like the other big producers have. Then we're looking at scale that gives us further options, not only as a more attractive economic proposition as a standalone project, but by being successful with that exploration, that will also, I would think, naturally attract other bigger players in what we're doing, and I think we then become perhaps more of either a takeover target, or perhaps the bigger companies are going to want to do something with us.
Interesting model. I mean, people watching this and listening to this should be aware of the different types of economic models available to you. That DSO, those are direct shipping or solution. Is there competition there? Because I think if there's like 1 mil and that's your option, it's a harder.
Well, this is the optionality, right? If you've got two producers nearby,
right,
then you're not sort of held to one or the other. So, and if we make it bigger, or we do things like pre-concentration of the ore or something, then you make it more attractive so it could transport even further. But if you get to a certain scale, then then it becomes more, let's say, attractive to have your own plant and do your own facility. But that's another story. But look, that's what we're really, we're trying to get that scale. We set ourselves as sort of an ambitious target. Can we get 100 million up to 100 million tons of potentially, economically viable mineralization? That's a good stretch target, if you like. Can we achieve it? I think we have the targets to do that. Now, La Romana's going to get us, a fair way down the track on that. So we don't know how big that is yet, but let's see what else we can.
It's interesting because they all have sort of different capital requirements, obviously, and what we've seen in the last couple of years is people just changing the business model somewhat. Because the type of money that's available, and quite frankly, the reducing amount of money that's available for projects, because we've seen a lot of value destruction in the sense of the economic studies have not delivered the margins that people have expected. You've seen even mid-build projects going wrong, and even after people are in production, things going wrong. So I think there's a kind of wariness about sort of groups who can and the groups who can't, and what type of money and the cost of that money, etc. But so these kind of stepping stones to, the most efficient solution, which is build your own and hopefully, capture all of that margin. I'm liking that sort of change in mentality in this space. That seems to be a new.
Well, I think for perhaps those that are not investors, people who might be watching this show that are not so familiar with us, with Pan Global. First of all, we have a board of directors that includes mine builders, exploration, people that have been in the industry for a long time, work with big companies, etc. So we cover the full suite there, right through to M&A, metal marketing, and so on. On the ground, again, different to most juniors, perhaps at our stage, we have 3 mining engineers. The general manager is a mining engineer. He worked for Rio Tinto. He's taken projects from pre-resource right through to mine closure. So this is a skill set that not every junior will have. So we can take this all the way, and we're going to continue to work things in that direction, because one of the things, as I said, we could just be a quarry, and that's a low cost, pretty simple mining proposition. But
this is one of the things that attracted me to your company initially, was the fact the mentality was, one, it's conservative and realistic, it's not arm waving, but the fact that you've all worked for big companies and you are setting this company up to be designed to be attractive to those big companies that you worked at previously. You're doing it a certain way. It is unusual.
Well, I think the first objective is that we want to find something big, meaningful, as an economically viable, copper deposit primarily. That's our first objective. If we end up being the developer, great. But if we're successful with our exploration, the other options will come naturally. The M&A, whether it's partnership or whether it's someone wants to acquire us or something like that. But the first thing is let's focus on what we're really good at, but safe in the knowledge that we have the skill set to take this all the way if we need to. And look, that's what we're working towards. So a lot of things that we're doing perhaps are a little bit advanced for the stage, considering we haven't published a resource, but we're doing some things that not only add value, but they de-risk the project. So we started our metallurgical program quite early. We've now completed sufficient detailed metallurgical studies on both copper and tin that it would be certainly adequate for a PEA, but perhaps at PFS, pre-feasibility study level. So that's a little unusual, but it's de-risked things. Fortunately, the metallurgy is excellent, both for the copper and the tin. So this is not only has it added value, but it's de-risked the project quite a lot. But it's getting us prepared in advance for a PEA as well.
No, I like that. And we have talked in the past about, the kind of drill to kill mentality. If it wasn't up to scratch, you'd say, well, we need to move on to pastures new. Let's talk about we touched briefly on the fact that this is a mining district. I was there, I saw it myself. The mayor was welcoming of miners and mining. But Spain, in Europe, comes back to the fundraising component in terms of that profile of the people interested in not just copper, but where it is. Can you talk about some of the conversations with the people? Can you talk about two large investors came in this round? What are they buying into?
Mm-hmm. Yeah. So a couple of years ago, we decided to focus a little bit more of our, communication with potential investors in Europe, trying to change our balance of where the investors were located. And that's been successful, and that's been evidence from the last financing. So over 80% of the investors that came in on our last financing were from Europe. That included Conwave, which is one of the largest resource-focused funds in Europe. But it also included a Spanish investor, private investor in the mining industry. So that was also a really positive development for us. And I think having those two there, gives I guess some further reassurance to other investors that look, some bigger people are prepared to write some good sized checks here too, because they see the potential in what we've got.
They've been watching for a while from the sidelines.
Yes, but it's been something we've worked on. You have to nurture the relationships and keep people informed, and we've been working on that. And look, we have a project in Europe, and it's copper. We're a copper-focused company, and there are very few of those in Europe. So I think that copper focus has resonated with people. You're not going to have an energy transition without lots of copper. It's the electrification, all of these things, wind, solar, all of these things are really sort of copper intensive. So having another source of copper in Europe in a mining friendly part of the world is a real bonus.
Yeah, I think we're seeing that in the States as well. That the whole kind of critical minerals security over there. I think Trump's been talking loud and large about that. Europe as well, looking to secure their own supply layer on in their own backyard. Look, I'm getting waved at here. You need to be at the conference. You got another day of solid meetings as well.
Yeah.
Congrats on the raise.
Thanks
for a start, and we look forward to seeing what you do with this drilling and this plan going forward.
We have lots of news to come out, and things are looking really, really good at the moment. So, watch this space.